Definitely flown. Wow, I love that. You guys know October is a big month for me.
Yes, it's your birthday.
It is.
Yeah.
Hold on. Definitely flown. Wow, I love that. You guys know October is a big month for me. Why is that replaying? One sec. Okay. Like, why is that replaying? But yes, October is a big month for me. It's my birthday month. Okay.
What you doing for your birthday, Jess?
Well, you know, last year your girl was super pregnant and did not enjoy it. I was 9 months pregnant at our birthday party, and even though it was so beautiful, I was hot as hell, sick as hell, and nauseous the entire time. We paid all that money. I didn't even eat my food. Like, it was just, So we're going on a trip this year. We're going on a trip, and I'm super excited because we're going to Jamaica. Yes, we're going to Jamaica. So we're just going, y'all know Michael's birthday. Our birthdays are 8 days apart. So typically we celebrate it 4 days after his and 4 days before mine. So it's going to be super excited. I'm super excited.
What's your birthday, Jess?
October 19th.
Big Libra energy.
Big Libra energy. Do y'all know that
That's my favorite sign.
is it? Libra is your favorite sign?
Yes, I'm an Aquarius. I get along.
Do y'all know that Libras are the wealthiest zodiac sign? Just saying. Just in case ain't nobody know, you know, if you Google what's the zodiac sign with the most billionaires, Libra comes up as number 1. So Libras also have the most entrepreneurs. No shot against anybody else that's not a Libra. Not kidding.
Gemini's in the building.
Now,
Yeah,
Libras and Geminis have the best chemistry, actually. If nobody knew that. Libras and Geminis have amazing chemistry. But Michael and I are both Libras, so it is great. We're very aligned on a lot of things. All right, give me 1 second. I just need to send out this link to Elle really quickly because he doesn't have it, and he's going to do the fundamentals part. I'm gonna start off with the charts, and then he's gonna do fundamentals. Let me just pull up the link. Actually, I can do it from my phone. Set up me. How to do it on the screen. So talk to me. How was last week? How was trading for you guys? Tell me how it was. So first off, how many people took the confirmations for themselves for the sales? How many people took advantage of the sales? Don't all say me at once.
Yeah, I got the sale.
Okay, and how many people bought at the right time? That's the key.
I did.
I love that. What were you guys' confirmations?
I had another minor fib that hit 618.
Okay.
Breaking a retest.
Breaking a retest too.
I know that voice. That's Tiara.
Hey.
Hey girl, hey. All right, let me just send this link off real quick. I'm just trying to the right one. Hi, how are you?
I'm great. I didn't catch that gold trade from this past week, but I did go 7-1, and my only loss was because my top loss was too tight.
Oh, I love that. That's what's up. So First things first, I'm going to go over the charts. And again, L is going to come on at the end because there is a lot that's been happening fundamentally. Like, honestly, some of those structures, like, even though we knew the overall play, like, even when it came to GU, I knew the continuation was coming. Like, even when we talked about gold, I knew the continuation was coming. Like, I had a goal for an overall sell, but that's why, let me just share screen and we'll talk about it as I go. Hold on 1 second, share screen. Let me pull up.
I had questions about that, the continued resolution and the government stuff.
Okay. Well, yeah, I'm gonna have L come on. I like even though I study fundamentals deeply and stuff like that, I like to actually have fundamental analysts when we talk about certain things. Like even when we did the tax call, like I like to have like tax professionals, just because y'all know technicals is my thing, but we still get the money no matter what. All right, so let's talk about GU first. All right, so this was the overall structure that we first looked at when it came to GU. We had this overall structure, but then we talked about last week how this was at the 23.6. So we knew the continuation was there. I did not think it was I thought it was gonna pull back a little bit before we got to this whole negative 68.1, I mean, negative 61.8 and the end of this zone, because if I scroll out, I wanna show you guys what I'm talking about. Y'all see this level of support that was here? Okay, so we got 3 levels of support that's going on in here when we talk about this whole range. So mind you that this is 4-hour structure. So I'm gonna talk step by step. Mind you, this is 4-hour structure, right? So 4-hour, we know it takes a while to play out. Key. All right, but y'all see like this whole, I'm gonna draw a line in here so you guys can see. This is why I thought that it would possibly pull back first before just continuing, because all through here, this was a level here. Do y'all see how this level just broke down? We didn't get like any level here, but you see previously we had like resistance right here. Let me draw a little bit down. Hold on. Put it here. Okay. So you see how we had, I'm gonna use blue. We had resistance right here, support right here, resistance right here, support, support, support. You see how here though, we just pushed straight down. So that was the point where I was like, okay, well, but we had it with confirmation. So remember last week we talked about momentum was still strong, but we needed to confirm, even with gold, we needed to confirm before, like we can know the overall move always, right? But it's your confirmations. Can you guys mute yourself so I don't hear my echo, please? It's your confirmations that give you indication of what's going to happen and when. So this was last week, we were in this triangle here. It wasn't until we had this bearish candle that broke down, where we actually had like a breakout of this, because this could have easily retested up and before the continuation now. So we had a break, a retest here. This continued down and it literally just kept selling. If you did not put your stop loss in profit, it would have been easily one that like you would have missed out on the complete structure of price continuing to fall, which is perfectly okay. And the reason I say that is because safe trading is always the best trading. Nobody knew it was going to fall as much as it did, even with gold. Nobody knew that gold was going to continue, even though we had the, he said, what's the password? Oh, sorry guys, hold on, let me send him the password really quickly. Even though we had our structure, right? It's not until we have our confirmation that gives us, okay, what it is that we're looking for. So even when we talk about gold, where, okay, price kept continuing to fall, there was a lot of supports that were broken alongside there. So it's one of those things, if you don't put your stop loss in profit, you could potentially miss out on some profits, but some money is better than trying to secure the bag fully and then price completely reverse on you. So it will be those times in the market where like sometimes the market can push, 70, 80 pips in one direction and then completely change directions. The market typically doesn't completely fall like it fell this past week. But again, there were a lot of fundamental factors that came into play. Sometimes we will have those big drastic moves some weeks, but again, I don't want anybody to feel like sad because, oh, like I should have held this longer or this and that, because I mean, this is just the environment that you're in. Does that make sense? It makes sense.
Yeah.
All right, but we did end up having the break and retest of this structure that came here on GU. This happened Thursday. It wasn't until Thursday that we had a break and retest of this. So we broke, retested, and then bought up after the top of this. You guys know once you have a stopping point, that is where you draw your fib. So that fib structure here, point A, point B, after we had this stopping point, so this was our first level of resistance that price had come to. All right, so we know after we have that fib structure, that is when we draw our, or after we have that resistance structure, that is when we draw our Fibonacci. Everybody's clear on that?
Yes.
Yes. All right, so again, we have point A, point B, price pull back. We had a 38.2 retrace, and then price literally, I mean, we all know our -27s are TP, so price hit -27 before pulling back to where we are now. Now, also, that was on a higher time frame. So I drew this trend line. Remember that trend line that we had? I'm gonna delete this one for now. Y'all remember that trend line that we had at the very top of this structure here that literally respected this also. So that -27 aligned with that structure here. Now, because we've fallen so much, y'all know anytime we have like a big significant push or anything like that, I do look for some consolidation. So look to see how price plays out this week. What I mean by that is, at this point right here, if this support, because price could push up from where it is, but if this support does not, like what I mean by the consolidation, even though we have this structure here and on minor structure, it's a push on the higher time frame, that is consolidation. Does that make sense?
Yes.
That makes sense to everybody?
Yeah.
Okay, so
Yeah.
look for this. First off, look, your first step is to look and see and make sure this support through here on this minor structure upholds. Okay. If it does not, if it upholds, then of course we're looking for a continuation of our buy. But again, because this is our higher time frame, all right, it's consolidation on our higher time frame, even though there are trends throughout on our minor time frame structure. If it does not, look for this, the way it's forming, it's not really a significant pullback in this. It's really forming as like a flat flag opposed to really like a pullback to continue. Does that make sense? Like the way the structure is forming, we kind of have, again, like somewhat of a triangle formation here. All right, so if this breaks out of this, the possibility of this structure coming to this -27 is high. But again, you need confirmation. The reason I say confirmation with everything is because sometimes, well, number one, none of us control the market. We just react to it, right? But look to see if this pushes to here before coming higher. Does that make sense?
Yep.
All right, but only if this does not uphold. So if this doesn't uphold and it breaks, then that's going there first. All right, because our big moves already happened, really. Like our main move that we're looking for already happened. Also keep in mind, there is a lot of momentum, especially on gold. Momentum still high, okay? Also keep in mind that this foundation level is below. All right, so you, again, this week, I want to take it step by step, no different than last week. Like this test, break, and retest is what confirmed our sell to continue lower. But our first part of our structure, like really the structure that I was looking for already played out. So now it's just, okay, take it step by step to see what's going to happen next. Does that make sense?
Yes.
Okay.
Yes.
Yep.
If you didn't get it from the top. Now, my advanced people, this was super easy to take on, literally just looking at, okay, this was our -27. We had a bounce off of this. Literally this minor structure, you could have entered along the top of this to continue down. But again, that's like my advanced traders. If you aren't like in the whole intraday scalping type sector, right, and you're not able to identify a real like fully minor structure, like some people took the sell off of here and they're just still in this, which are stop loss and profit. That's completely fine also. Okay. But for my newbies that's like looking to take your trade, wait for your break and retest to see if this can continue lower or push up from where it is, or even potentially come to our foundation level. Make sense?
Yes.
Okay. With gold
Yeah.
though, with gold, we have a lot of momentum. We have minor divergence starting to form, but we still have a lot of momentum on, if we look at it from a higher time frame, the momentum is still strong here. Does that make sense? So here we had what we talked about last week. Hold on. Why is this doing like this? Hold on. I'm gonna put this on here. Okay, so last week we had this fib drawing here for our main one. We talked about the minor possibility, no different than the minor possibility that's happening right now on GU for below. We talked about the minor possibility of this testing this trend line before falling down. All right, but we ended up having multiple breaks and retests here that confirmed, and then we had this wick exhaustion pulling below that confirmed, okay, we're going down. And then once this level broke, I think Nellis even talked about this level on a call, because like where it was on Sunday night's call, it just wasn't like, if you don't really know what to look for, the entry at that point, it's not that it would be a bad entry, it's just risky. All right, so after we had like this bearish momentum, this was the TP level that I had set for that. Strictly based off the fact of one, fib levels. So we know point A, point B, price pull back, but this was a minor structure. Remember, we have consolidation in our minor structures. In our overall structures. Hold on, I'm gonna put up auto so you guys can see what I'm talking about. Okay, so let's look at this from a higher perspective, right? All through here, this ranged before we had a lower low. Does that make sense?
Yes.
Yep.
But so what I mean by, I want to reiterate this for my new people, what I mean by consolidation on our higher time frames, these are still trends on our minor time frames. So these are still like, just like this is consolidation on this super high, like when you get to your 4 hours and you're looking even at 1 hour structure, when you are in your structure, like as a day trade, these are still uptrends and downtrends that you can take advantage of even with your fib levels and still make profit from. Point A, point B, price pullback, continue. Does that make sense? So
I got a question on that. How would I know where to get in if I would have took those setups that you were just talking about?
over here?
Yeah, because I feel like I wouldn't know where to get in because I don't see like anywhere I feel like I would have like a break and retest or any other like.
Oh, you have breaks and resets, but mind you, right now I'm on a 1 hour. So you have to break it down to go into your structure. You can't see them on the 1 hour because remember, we're not never entering from those 1 hour time frames, but on your smaller time frames. So this was the whole level here. It's breaks and retests all through here. Like for instance, this structure here. Like if I'm taking this buy here from point A to point B, price pulling back to continue that, your entry would be right here on this 23.6. So here, price break retest, this would be your entry for this to continue up.
Okay.
off of your minor structure. Remember, when you're entering, you're scaling in your charts.
So what would be like another confluence? Because I be trying to just take breaks and retests like that, and then I get ate up. So I'm trying to figure out like what else could I be seeing here that would make me comfortable to do that.
Well, your first confluence is your direction. So you see, you have this strong impulse up. Then our first pullback, we have exhaustion. Does that make sense?
Yeah.
So if we have a strong impulse up, we know that we need to reach that next level of resistance. But the question is, where are we going to get in that for that? Because easy as this came here to impulse, this can pull back as far as it wants to. Remember, Fibonacci is a tool that's used to measure a retrace of a counter trend based on the current trend of the market. So this could have easily pulled back to this 50% that was resistance through here also. Does that make sense?
Right. Okay.
So your confirmation literally would be your break and retest, but you're looking at your structure to confirm that. So we didn't have a lower low point. It got higher, higher, higher. Does that make sense?
Yeah. So it's okay to look at like exhaustions and stuff like that that are not necessarily in the vicinity of where I'm taking the trade at. Like it's still relevant, even if
it is the vicinity, because remember, this is 15-minute structure. So this is all one structure for this trade.
Okay.
Does that make sense?
Yeah, I got you. Thank you.
You sure?
Yeah, no, I got you. Thank you. Appreciate you.
Okay. All right. Okay. Well, yeah. So you're using the multiple time frames. I mean, not multiple time frames. You're using multiple confluences, but the first thing is, remember your first three questions when you approach the market. What is major structure? What is minor structure? Is there a breaker structure? That's the first question. So even last week, we had our major structure. Our major structure was, okay, this sell, right? Our minor structure was in a pullback structure. So we talked about, okay, look to see if this is going to break and retest here to hit this trend line before the continuation of the sale, or if it was going to respect this to continue down. That's our minor structure. We didn't have a break of structure at that point. Remember, what is major structure? What is minor structure? Is there a break of structure? This was major structure. This was minor structure, but we didn't have a break of structure to confirm anything at that point. Does that make sense?
Yeah.
So even with the trade that I had taken right here, right? We didn't confirm that this was going to go lower up until the point that we had all of this momentum shooting down. Like the whole thing in trade what you see, not what you think, right? So you're not just going to guess, hey, it's going to come to this level of support and it's going to continue to break, because you don't know that until you have the confirmation. Confirmation is, okay, it broke this level of support, then retested, and then continued falling. Do you see that?
Mm-hmm.
While price is playing out, it could have easily, remember, anytime we trade, we're looking left. So it could have easily came to this level of support and rejected it in and pushed right back up. It's just the economic factors that came into play, ultimately, our news and fundamentals, so forth and so on. Like, remember, your fundamentals always align with your technicals. Your technicals is literally support, resistance, so forth and so on. Like, we see what's happening, we see what's setting up, and then our fundamentals tell us why what's moving is moving. Does that make sense?
Yeah, I got you.
Okay.
For that support where your bars pattern is, did you wait for the retest there as well?
No, I didn't, because I wasn't staring at my phone. Like sometimes, remember we even talked about that. Remember that GU trade that I was in last week, and I told you guys that I had removed my take profit because I saw it. I had a lot of momentum there. This one, I had set this trade and I didn't go back to it. So once it had literally closed me out in profit before I knew it. So this wasn't one that I could like go back to my phone, because I don't even remember what I was doing. I was super busy this morning. What was this, Tuesday morning? I don't remember what I was doing, but I wasn't looking at it. So, you know, like when you set your orders, they close out. So I had just, by the time I had gone back to my charts, I was already closed out on this particular order. And then I had just hopped into, you say what?
I mean, like where the entry is, where your bars pattern starts right there, it's like at support. Did you take it right there? Or did you wait for that retest?
Oh, I waited for the recess.
Okay.
Yeah, I waited for the recess in here, but I had also saw that this was a lot of bearish momentum here. Cause I wish I would have taken it up here, but I wasn't on my, like, I didn't have my phone at the time. So I was looking at it, but after I had this confirmation of this, like after this structure, we had this retest here. This happened on Monday. So once we had this exhaustion here, that's literally giving us indication, okay, we're about to, we talk about momentum and exhaustion all the time, right? So we're about to go. Then we had this big bearish candle, right? That also gives us insight. Okay, it's a lot of sellers in the market. So at this point, I knew that my take profit was here regardless, because that was my fib level for that structure. Did that make sense?
Yes, thank you.
Okay. Does that make sense to everybody?
Yes.
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 Okay, great. Elle, are you here?
Yeah, I'm here. Sorry. I always mess up with this Zoom stuff. Can you hear me?
Yes.
All right, cool.
Yes, we can hear you. Okay. Can you hear us? Can you see us? Oh, wait. I think I
can
just
hear you.
stopped your video on accident. You could share it again if you want.
No, I didn't want to share the video. I was just getting off of mute.
Okay. All right.
But yeah, let me know when you guys are ready.
Oh, you can go in. So you guys, Elle's going to talk to us a little bit about fundamentals and what's going on fundamentally and economically. So as I talked to you guys, it was a couple of things that happened this week. Well, first off, we talked last week about the Great British Pound and the interest rates and why the Great British Pound was continuing to fall. But in regards to the shutdown, in regards to US dollar, all of those things, Elle's going to give you guys some insight. So Elle, you have the floor.
Okay. Hi, everyone. It's nice to see you again. Those who do remember me and those who don't, just welcome and thank you for having me. The main premise of just kind of my little spiel today is the concept of the inverse relationships of prices and interest rates. That's really what is the running narrative that's been happening for this past year. Again, the inverse relationships of prices and interest rates. So we've been in an environment where interest rates have been increasing, putting pressure on currencies and commodities. That's pretty straightforward. You had the situation with the Great British Pound. For those of you who do read macro news, macro being macroeconomic news, you would know that the Great Britain, or what do you call it? The Bank of Britain, or I can't remember right out now off the top of my head, but they chose not to increase interest rates, hovering around a 5, not going to 6. And this is a big deal because that would generally weaken the currency, as you have seen. Remember, you want to increase your interest rates to make your currency get stronger because there would be less circulation of your currency. That is the premise, right? So what is that saying? Saying that interest rates up, prices down. You're trying to get a deflationary environment. You should care about this because, well, those of you who might not have been able to see that, you probably lost money last week. And if you did see that, you might have inversely lost money with the US dollar. So the US dollar, what was looming was a government shutdown. Didn't get the government shutdown, came right down to the wire. That's usually political fumbling and bumbling. It was my estimate that we would have gone a few days longer without getting this new budget agreed upon. But every year we run into the same issues, sometimes longer, sometimes shorter. But what it does from a currency standpoint, which is very important, is that you saw that the US dollar started falling while it had been so strong for weeks leading up to that. You'll still continue to see it be strong, in my opinion. You saw it fall because if you have people not working, especially in government, where that's the majority of where money is paid out in this country, or the US, excuse me. I know everyone's not in the US, but the majority of money are being paid to a lot of government contractors or government employees. You would tend to see that GDP would drop. You would see less demand, which would decrease the US dollar. Also, you were just seeing that financing is harder in dollars. So you're not seeing that attractive demand that you would have seen prior to people to do loans in US dollars. This was a very cautionary tale for those who remember China Evergrande and a lot of other real estate situations going on around around the globe. In that there was financing done in US dollars. US dollars are now worth tremendously more, and it is harder to pay the note on those loans that were taken out in dollars when dollars were cheaper. Furthermore, I would also say that if you're going, as I'm saying, that you're going to continue to see a stronger US dollar, I think the next portion of it is a soft landing and the hope to make one happen. You still keep hearing words about recession, and everyone's like, well, if it's happening, where is it? Well, as I have said in many conversations that I've probably had with you, but they've been pretty spread out. Recessions don't tend to happen in a way where you can easily see them. They tend to be a byproduct of unexpected circumstance, and you won't notice it. It would take a lot of research to figure it out. And the closest thing we had to it was the banking crisis in March, April of 2023. But there is always something around that will expose itself. I had a lengthy conversation about this in my podcast, and I would say that it's probably going to be a thing that directly relates to currency. It's called off-balance sheet debt, but you wouldn't know the currency pair immediately unless you did a lot of digging. But there's someone out there, and there's a lot of people, they have debts that are off the balance sheet. They hold them. You would think about like something like an FTX or crypto. It's not to poke fun, but I have to give you that as an example because on one hand, you would say like, oh, this is completely healthy. Everything's working fine. And then you see a triggering event that cascades and makes that company blow up. Well, there's a lot of off-balance sheet debt, and interest rates are continuously rising. If it's debt and it's off balance sheet, it still has to pay an interest rate. And even worse, what tends to happen to people is that the rates are getting higher. You don't have an ability to refinance, no different than like a home. And the demand in the overall economy is falling because you wanted deflation. So people aren't able to buy as much. And it usually triggers an event where those debts cannot be paid. That's speaking on it from a more broad perspective, but as we go forward, I can narrow it down. I just don't want to be super long-winded. The other part is, I think I said gold. I would say that if it's my bet, just my bet personally, not as an advice, I think the price of gold starts to cascade down in 2024. I don't have a target price, as I don't trade gold all the time. I more so trade gold on momentum, but I think that demand destruction will continue, and I don't think we will get this soft landing that everyone expects. You're going to have general elections that are going to come around, and things are going to start heating up for re-election of presidency, and you should get some more political gridlock and foolishness that should just affect the overall economy, which would also affect commodity prices. One thing I can say from the oil standpoint, you have production cuts with Russia and Saudi Arabia. I mean, these are pretty general things. They want to push oil into $100 a barrel. Russia's getting what it wants currently because, you know, they have a war to fight and you want to fund your war. And sanction, no sanctions, those, you know, those barrels of oil still find their ways to other countries. I think that we do get back to $100 oil, especially as averting a U.S. government shutdown. Excuse me. I think we definitely get to $100 oil, not so much just because of demand, but because the Saudis and the Russians are cutting production. And then there's that one other part that everyone always fails to mention and talk about when speaking about oil, and it's the fact that the U.S. has the same incentive to have $100 oil. We use fracking, and fracking is profitable about $70 to $75 a barrel. So you don't want, or at least banks who are financing fracking don't want it cheaper. We are pretty much one of the biggest exporters in the world, if not at least top 3 at this point, producers and exporters. So we have to keep it high or that industry runs into a problem. To just prove that point, if you recall back in the pandemic, everyone was up in arms at Donald Trump and just the whole administration because they were letting oil and gas companies pretty much go into bankruptcy. And I'm talking about the biggest ones. One of the biggest ones, Harold Ham's. Oh my gosh, I can't remember quite the right name right now. It's a natural gas company, but it's really big. And it was headed for bankruptcy along with a slew of them. And that has more to do with the fact that the oil prices were so low, natural gas prices are so low. And now that you've gotten another pump and they're back up to close to $100 a barrel, I am sure that they're going to fight like hell to keep them there. So I am going to still be long oil. I don't think it's a parabolic move to like 120 or anything like that, but I think it hovers well above 85 and stays into its 90. It's well above 85 and continues into 100 and stays around 100 until some, event happens. I can't say what event happens in the future. If I could say every week to every other few weeks what I read a bunch of macroeconomic news for, it is to figure out where, in essence, the proverbial canary in the coal mine is, so to speak, is that what am I missing or not seeing that would be that triggering effect? And lastly, I say that to you because, like, I always use my shorting of Bitcoin as an example because I understand like macroeconomics and I understand like how regulation works. I knew where to bet on that. I don't care who went long. As like once regulators get in there, it's going to change that landscape and it can't be worth that because they're going to force that issue. Well, I'm looking for that for the overall economy. Is it off balance sheet debt? What is it? Is it adjustable rate mortgages in other countries? Because that is a big issue currently with New Zealand and Australia. I talked about this before. And now you have Sumitomo Bank in Japan, who has a lot of adjustable rate mortgages in New Zealand and Australia having an issue. So on and so forth. That's kind of my little take at the moment.
I have a question about oil, really quickly.
Sure.
I've heard, and thank you for your time. I've heard you on these calls multiple times, and you consistently will always mention oil and the impact you anticipate and where you see prices go. When I'm looking at, say, myfxbook.com or Forex Factory, and I'm sort of tracking, even though I'm using mostly technical analysis on my charts, but I'm sort of tracking when the major news events are coming out. And I see like an orange folder or supposedly a red folder event around oil prices. I don't, at least on a week-to-week basis, typically see a big impact on the charts on a week-to-week basis based off of that oil news that comes out. So I guess my question is that more of like a long-term like swing trade kind of impact to? Yeah.
Yeah. So the other thing I should probably say in this, that I know I didn't say it in the beginning, and this is what everyone should take my commentary as. I would say my purpose to this call and what I actually do, I look to be able to interpret the market in a way where I can put on a big trade and be able to be early or earlier than when the rest of the market participants figure it out. So it's not to say it's the only way I trade. I also trade on, day-to-day, very technical aspects of things. It's just that in this call, Jessica has that down pat. I use the macro factors because if you can figure it out before everyone else, it's not so much about trading it the regular way. It's that you can use a derivative before everyone piles into the standard contract or the standard trade. So I'll again give an example. So when Bitcoin is 50,000 and I'm trading it, I'm not going to trade a Bitcoin. I don't care at that point, right? Because a derivative contract at that point is very lopsided. So I can buy a bunch of contracts for cheap. And because I am very confident in the direction it's going, I now own the position extremely cheap and I can wait on it. So that's how I'm viewing it. So if I see oil, I'm not sitting here to say oil is like one of these next big trades. The last time it was a big trade was in 2020 when it was like negative or really low. I mean, I spoke about it at length. I was like, that's $60 all day, $70 all day, just simply because in the US, you have bankruptcies if you don't have $70 to $75. You just have bankruptcies. That's how it goes. And that's what happened. And sure enough, they pumped it back up.
Got it. So typically for like that long-term position trading that I'm interpreting as that's sort of what you're referring to. In that long-term position trading, what would you typically say the impact of oil prices have to do with, say, specifically the US dollar? Like, how does that correlate to where on a long-term, multi-month type position trade, how does that correlate to like where you can expect the US dollar to go based off of where oil prices are going?
So it just boils down to, and this is where I'm laughing because I had a friend of mine just text me like on Wednesday, similar to this question. He's like, I get it now. He's like, the point of what I'm saying is that in the old days, you could say, all right, this is probably where it's going to go and it's affecting the US dollar. The new thing is what I call the global reserve currency game theory. So like the global reserve is the US dollar, but you're having other sovereign nations that produce a lot of oil willing to do transactions and settle in other currencies. This is why I start at the beginning of this conversation and say it's the inverse relationship of interest rates and prices, which is affecting currencies. So if you have this particular situation, to still answer your question without going too broad about it, it will be determined, like that oil price trajectory will be determined by the ability for those other sovereign nations that sell a bunch of barrels of oil to, let's say, India, and the Indians then settle that debt or that settlement of that oil transaction, and they make good on the payments. I know that sounds all murky and jumbled, but everyone's not settling in dollars anymore, especially as it pertains to oil. That's not what's happening anymore. It's changing, which is a big deal. So it's going to be determined by their ability to make good. If they can't make good on, the contracts that they set, because not everyone's paying cash. There's credit lines attached to whatever oil transactions. They can't make good. You're going to go back to dollars. And if you go back to dollars, you'll see, demand for dollars increase and become more expensive. So I would say that it's still yet to be determined. But if it's my bet, I would say the experiment has just started, and I can't say if I would just be, blindly long, but I would watch it. But I could say there's probably going to be a point where if we cross paths again, you'll probably remember this, or we'll have this exact conversation again due to some other sovereign nation, emerging market being unable to pay that debt for whatever oil transactions they needed to settle. And again, I want to repeat it, inverse relationships of interest rates and prices. Why would they have an issue being able to pay? Remember, I talked about China Evergrande and how debts are settled and how what do you call it? Loans are taken out. If you're taking them out in your currency and something changes about the other currency or the other currency becomes more expensive or something of that nature, it's going to take you more. Not if you take out the debt in your currency. If you take it out in the other sovereign nation's currency that is selling to you whatever that commodity is, and their currency becomes more expensive, it's going to be hard for you to pay that debt and you may default.
Thank you. Makes sense.
You're welcome, sir.
Any other questions?
Yeah. Hey, Al, can you hear me?
Yes, sir, I can.
So what upcoming red folder news this week, other than maybe the possible government shutdown or anything else, are you seeing to kind of possibly affect the markets this week?
That's a good question. I really honestly can't say that I have anything. And I'll tell you why. This is just to me personally. I haven't liked the market for the most part for the past few months. I've been very weary on what I'm trading, how I'm trading, because I just didn't feel like the risk reward was really there unless I used more leverage. And when I have to necessarily use more leverage when I'm not clear, I don't tend to like it. But I can't say that I have anything that I'm specifically looking for. I'm sorry. Yeah, I don't have, I know I can't articulate that the best, but I've just been very weary. You know, I can interpret it. I can see what I have an opinion on, but I always have an opinion simply because I know a lot of product. So like if I read something, I'm going to have a product that attaches to it. Like whether it's global news, I'll understand it, but it doesn't necessarily mean that I'll do something with it, or I'm, waiting for particular news because I haven't liked the market. So I, more so just reading.
Understood. And just like, I don't know if you've been observing the dollar, like, we usually have like an inverse relationship with the dollar and the markets, the indices.
Yes.
Do you see the dollar continuing with the strength and like kind of the indices still kind of showing a little weakness? Because I know I don't know if you observe cycles, but
Yes, I do.
Yeah, I know September was usually a bearish month for the cycles, and October going into October we're supposed to kind of see a nice bullish run. So I don't know if you're looking at the dollar wise, like do you see it still kind of continuing momentum and the indices still holding that bearish trend, or do you see kind
Oh
of
yeah, I think you'll definitely get continued strength again after averting a shutdown. The only other thing that's really going on in this country is UAW strike, and I can't really say there's anything else that's overly major. I mean, you're going to have some demand issues, but we're not raising rates, and they don't intend to raise them until probably 2024. I can tell you that one of the things you should always look at, for those who may or may not, that you should always look at what's happening with lending. They always talk about this on UStreasury.gov. They tell you new loans that have been issued, and you want to know about that because that is, at least within the country, dollar strength. And then obviously you want to know about treasury auctions. That tells you again dollar strength. Specifically, you would care about 2-year treasury, 10-year treasury, 20-year treasury, but mostly 10 and 2. and I've been seeing those been pretty consistent. So yeah, I would say that strength continues. Of course, you can have what do you call it? Some retracement to the downside, but I think that you don't have anything really standing in its way after clearing up a government shutdown and market and the Fed being clear to markets that it doesn't have an immediate want to raise any rates. So that's where I would be personally.
All right, appreciate it.
You're welcome, sir.
What kind of things do you read on a day-to-day basis to like stay up to date?
Oh wow, yeah, I read a lot. So I read obviously Bloomberg.
He
every
reads
week.
a lot. A
I
lot.
can tell.
Um,
All right, go ahead.
A whole lot.
So I read Bloomberg, and one of the reasons I like Bloomberg, obviously, it's just like, well, generally Bloomberg, right? But it's more so when you subscribe to Bloomberg, not just read the article when you Google. When you subscribe to it, Bloomberg runs all night, and it gives you world news all night. Just like we get like a bunch of like headlines coming through, like when it's 7 a.m. our time and stuff, like 8, 9 a.m., 9 a.m. and stuff like that. Well, when it's that time in another country, it's giving you all of that news. Then you got to like sift through it. One key thing that most people should understand is that I learned this because I have a publicist who writes articles for me. So being transparent, like I don't write my own articles, but I write articles, right? Like verbally, and then he writes them. Almost all articles that are financially related as it pertains to like Bloomberg, CNBC, and these places, they're all meant to be read in roughly about 5 to 7 minutes at most. Like they don't go past like 1,500 words. That's like heavy. This is a big deal because that's how much news you can consume, because the articles aren't meant to be overly heavy. So I read a lot of Bloomberg because I can consume it really quick. Then I go over and I read a lot of treasury.gov because I want to know what auctions and things are going for. Because remember, and I've had these conversations with Jessica, the very cornerstone to all the shit that you're doing, sorry to curse, is interest rates, prices, their inverse relationship, treasuries, bonds, and derivatives that are made off of those things. I'm not saying if you understand that, like you just win, but everything else is just based off of that, right? Like your currencies are promissory notes on treasuries. So you better care what a treasury is in another country, is just like it is in your country, because that's what that currency is. Yeah, obviously, yes, the technical matter, but remember, the more you understand about what's happening with that treasury auction, and you're doing that digging, the more you can do your day-to-day trades, but then plot out a bigger trade. So again, treasury.gov, Bloomberg, what do you call this place? I love Investors Business Daily. I think that's a really great, simple, straight to the point take on the market. Barron's is great. The Bond Buyer is also really great. Again, you don't, as I've explained also to Jessica, I bring Jessica up because at some point you may have these questions for her and she'll be able to answer them. The reason you care about sometimes things that aren't immediately related to currencies is because when you can, remember, we're all transacting in a currency at some point, and you want to know what is going on, or if there's something sucking money in a particular market, it's going to come back in effect. Because, you may not trade yuan, right? Again, I'm going back to China Evergrande, but when that thing hit, didn't matter that you didn't trade yuan. It affected other currency pairs, because whether you traded the pound, whether you traded the dollar, they were globally in all of these markets taking loans in their currency. So.
Thank you.
You're welcome. So I just to repeat it so it's simple to everybody, I read Barron's, the Bond Buyer, Investors Business Daily, Bloomberg. But with Bloomberg, you have to subscribe to it so you can get all the world news for Bloomberg. You have to get everything all at the same time. It's not even expensive, like $34, maybe $40. It's definitely not $50. It's like 36 to 30 to $40. Again, like I said, not to overly talk, I like to know the world news. But it only helps you also to know the world news if you know the products that attach to that news. It's not like as simple as just one product. There's a slew of products, but the more you understand those products, the more you can interpret how to see it and what to do with it.
All righty. Well, Elm.
Hey, Al.
Oh,
Sorry,
okay.
Jess. I
No,
have
it's
one more
okay.
question for Al. What do you think of the new currency that's coming out, man? The BRICS situation with China and Brazil. How do you think it's going to affect us? Right.
Here, I want to do this because this will be the best way for you to know it. I'm sorry that it's taking me 2 seconds, but I want to give it to you because I gave this to my friend. So I'm copying something that I'm going to put in the chat, and you're asking me how this new BRICS and this currency is going to affect things. I want you to listen to this episode. I'm still going to answer you, but I want you to listen to this. It goes to everyone. It goes to my podcast, right? I had seen this happening and coming on the emergence of this problem.
Oh, can you text it to me too so I can put it? Oh, never mind. I'm gonna put it in the YouTube because those people don't have access to this chat. So I'm gonna just copy and put it in the YouTube.
Oh, okay. So yes, so exactly. It goes back to there is just a game being played with treasuries and who can dominate having the currency that has the demand. And in a way, people are thinking like, how like sometimes we have the people who are like, oh, the US dollar is going to shit. And then you have the people who are like, well, there's digital dollar, and then there is crypto, and then there's a new hat in there with the BRIC nations. What people are really jockeying for the position of is to be able to play with rates, because when you're the global reserve currency, you get to play with rates and play with how the commodities are settled. But like I said, there's the key part that I said in the beginning of this. It's your ability to actually settle up on the debts once you are settling in whatever currency you choose. It's not as simple as that. Oh, you just get play with rate. That you just get what do you call this thing? You just get a currency and it now has the ability to just challenge. You follow what I'm saying? So I don't think that it's at a mature enough point where that currency is going to matter in that way. But what you'll also see in that episode is that the other nations are more so fed up. And what because most people think of it like, disruptive. And yeah, you could think of it disruptive, but it's really being fed up. There was a situation that occurred in 2020 and going into 2021. It was heavy in 2021. I don't know if you remember it. The situation that was specifically happening was with Yellen and these other sovereign nations and forcing people to buy short-term treasuries when they were negative because you wanted to, the yield curve was inverted and you wanted to change the inversion of the yield curve. You wanted to flip it. Hopefully you're following me, because I can see these things in like a visual way. So sometimes it's murky, but think about it this way. If I have an inverted yield curve, which literally means that I make more money on short-term interest rates rather than long-term interest rates. And then to fix that, right? Because that's not how it should go. I shouldn't make more money borrowing to you short term. I should make more money borrowing to you longer term. But now what they wanted to do, and Yellen came in and all this stuff, again, it's more in detailed and structured in the episode, is force other sovereign nations, hey, buy these treasuries that I know are yielding negative because I need you to buy them. And the other sovereign nations are saying, no, why would I buy a negative yielding treasury? And then they say, all right, this is the federal government says, hey, all right, we're going to give you an incentive, a sweetener to do this. But in essence, what you're doing is because dollars are in demand, or the safety, or what a lot of, because dollars are what a lot of people settle things in, whether it be commodities or debts, you're choking it down other sovereign nations' throat to say, take this, even though it's bullshit right now and it's yielding negative. That actual thing, it proves its ugly head in another place in 2023. When you listen to the episode and then you pay attention to the banking crisis, this is what happens. So they force them to take it. They start to flip the yield curve. They say, if you do that, we will give you a sweetheart deal on 20-year treasuries, meaning you will get them at discounted rates. What it means by a discounted rate is that treasuries come out at 100 cents on the dollar. I'll give them to you at 90 cents on the dollar. But there was a problem. Just like those banks ran into. That 20-year treasury, because rates had to keep rising, if I had a 2021 20-year treasury that paid me, let's say, 3.5%, even 4%. Well, right now rates are at a 7%. So what happens to your 3.5%, your 4% treasury? It's worth less. It's worth 70 cents, 65 cents on the dollar. That's what happened with First Republic Bank. I say all of that to say all of that is one of the main reasons why you get that brick currency. That's one of the main reasons you have the global reserve shell game, and why it's being attempted. But again, the one caveat, and I'm repeating it again, is that you're going to have a big issue with the interest rate portion of it, because in certain nations, people don't even realize this, you can't get fixed rates on some debts. It's adjustable rate, like a credit card on a lot of debts. So there's a lot more for it to play out, and that's to answer it. Is it true the
Thank
U.S.
you,
has
Al.
more gold reserves? You're welcome. It could be true that the U.S. has more gold reserves. I mean, it's not going to matter because everything's going to run on credit. Irregardless of people, again, and I tend not to try to get into that conversation, not because I don't want to, but because it becomes a fight with a lot of people where they're just like, well, it should be the gold standard, it should be this. It's never going to be that. Like, your day-to-day life, my day-to-day life, everyone else's day-to-day life is running on credit. And that's why most people are thinking they're clamoring to run the currency. Yeah, that's one part, but he who runs the currency in essence is a lot of ways running the interest rates, and the interest rates matter a lot. Screw, like, when people just thinking about it in mortgages, interest rates run derivatives. And derivatives are a huge part about how a lot of people really make money. And I'll prove it to you. You have currency, yes, but when you see the other people running in the options market or the commodities market, they're all using derivatives, and interest rates are heavy as to how those markets run. So yeah, check out that episode. You might have to listen to it like twice. It's a wacky concept, but it plays out. 2023 in the U.S. it played out. In 2022 in China it played out. So check it out.
Is it only on Apple, or do you have it on Spotify as well?
Oh, it's on Apple. I put the link to, if you go to the everyone meeting chat, that's the link to the actual episode. It's an old episode because a lot of my stuff because sometimes people start going through it. I'm very much ahead because I don't know. I think about things in a different way. I'm not like the only one who's ahead or anything like that, but I'm just very much ahead. A lot of the shit that I talked about in like 21, 22, like played out over time, and it played out within a year. Sometimes like 3 months to a year from when I was speaking about it, and it tends to play out really, really clearly like that. But again, that's because it's almost like chess. If anyone's really into chess, you do get to a point where there's only so many moves you can make. And that happens a lot in economics. The goal is to try to like twist it and reverse course the best way you can. And that's where unforeseen things happen and something breaks. Hence what I was talking about by off balance sheet debts. So I don't know. I think there's something there though.
Did they ended up having a continued resolution?
No, I think they sent it to Biden and they're waiting for him to sign it. So, they have it in principle. They had to give up something. I didn't fully read everything about it, but they at the 11th hour, like this government is good for. That's when they usually get it all together, or they let it go for days. I'm actually pretty impressed. They're doing much better than they were doing during the pandemic time, where they couldn't get anything agreed upon in any, within deadlines. So.
What's your play, or what's your if it happens or if it doesn't happen? What are you leaning towards? At least on the dollar.
Oh no, I think the dollar continues to get stronger. Like, don't get me wrong, like, could it catch a breather? Yes, but I don't think there's anything that's immediately slowing it down. I'm confident in that. Yeah, do I have an exact price target? No. And here's the reason: because I am not actively looking to trade it on a day-to-day basis or any super long-term basis. My biggest trade right now that's on and that I manage is my trade on one-to-one parity with stable coins. So I'm a bit out of the wheelhouse of exactly currency, kind of in currency, but it's cryptocurrency. I'm not a pro crypto guy or against. I just know regulation, and I have a succinct feeling that they will break the buck.
Would you be looking to make anything before or after? So would you say that it would probably push after the deadline?
Yes, yeah, I would say that. Yes, that would be my 2 cents.
All right, I appreciate you, Al.
You're
and
welcome,
how
sir.
often do you drop an episode?
The reason why I haven't been dropping them as of late is because in a way I kind of hit my goal. I was telling everyone prior to this that I put a very firm number, 17,000 on Bitcoin. It hit the number. I kind of made what I need to make to where I don't really have to do anything anymore. I was very early. So I haven't been so inspired to make new episodes, though I say, like, I've recorded them and then I just didn't release them. So I used to do the podcast where it would come out like 3-4 times in a week. And I don't know. I guess I need new inspiration, or so to speak, because my inspiration was not necessarily like people. It was more so, one, I liked being right, and two, I didn't like repeating myself when I would have conversations with like clients, but I mostly just cleared them out at this point because I had a really good trade. So I kind of just haven't done it. Best way to say it.
Any newsletter or anything?
No. I used to do it because I did it for clients. I never actually did it for any sort of recognition. But some days I want to. I don't know. I don't know. I can't honestly just answer you as to when I'll do it again. It To do that podcast is a thing where I have to be really inspired, because you're putting yourself on the line as to whether you're right or wrong, right? Not to say I was like always right. I would say I probably was like somewhere in the 80% if I remember my numbers. So that's why I haven't had that inspiration to say, oh yeah, man, I want to be a dog about this right now. Like 2020 all the way up to early 2023, I was a dog about it, and very, very accurate. And part of me also was just kind of waiting for my stablecoin thesis to play out. A lot of my other thesis has played out. Like I said, adjustable rate mortgages in New Zealand and New Zealand and Australia, with the issue with Japanese banks and their ownership of those mortgages. So yeah, that's kind of where I'm at. Maybe, I don't know, maybe.
What would have to happen economically for you to be on fire again, or want to drop a lot?
I would probably say probably with stable coins, breaking the buck, that'd probably get me excited again. Like it had, and again, it's not because like the market's not hot. Like when the market was hot, I was actually completely contrarian to the market. Again, I say that because at least the way I understand it, I worked in this industry for a long time within like big firms. The money, like how you make a lot of money really quick, is your ability to find undervalued derivatives. That's the whole thing of how most people make a lot of money really fast. To make it more simple, just in case, I'm not saying everyone doesn't understand, but just for those who can understand, that's the whole way you make all that money in GameStop. The derivatives are the options, undervalued. You make your money. So we are in a market environment where those derivatives are a bit harder to find right now because there isn't so much of an aggressive swing to one side. You're working more for your money. And I'm sure a lot of you have come to realize that, you're probably doing way more now for your money than before.
Elle, do you want to come on next week too? Because people seem like they still have like a lot of questions, but we are definitely over time. So do you want to come on either next week or the week after or another week this month?
Yeah, next week is cool. I'll be back, and we can see how the week kind of plays out with the dollar, but I don't know. I'm looking for that inspiration though, guys. So I just don't want to give people half-ass work. Like I gave really good work for a long time, and or I can also do it where I'll probably just have a lot of guests, but people who I really, really respect and that I talk to often that, give me insights. So maybe I could do that to kind of get my mojo back.
Okay, perfect. All right. So either next week or the 15th, I'll have Elle on either next week or the 15th. For the people in the course, don't forget your call is tomorrow, every first Monday of the month. So make sure y'all hop on that. I will be present 8:00 p.m. Okay. And then last but not least, everybody tell Elle, thank you so much. We appreciate him so much. He was absolutely amazing, as he always is. So make sure you guys follow him. It's Trade Talk from a hedge fund insider. So make sure you guys go follow it. Apple, Spotify. Well, is it on Spotify? I know it's on Apple.
It's on everything.
Okay, yeah. So it's on everything. So make sure you guys check him out. Again, just to recap the charts, we're here on GU. Watch the front or the previous part of the video, but like where we are right now, we need to break out of this structure. On minor structure, we kind of have some like divergence forming, but we still have not broke this level of support. So look to see if this pulls back before it comes to this trend line, or if we maintain this level of support. So just follow, like literally wait for that to break out of the triangle. It's going to give you its direction. So always make sure you just have your structures. Confirmations are key. I will see you guys tomorrow night, and good night.
Good
Bye,
night.
guys.
Thanks, Jeff.
Take
Bye.
care, guys.
Thank you so much,
Yeah.
Elle. Thank you. Thank you.
You're welcome.